Welcome to BRR Media. Today I'm joined by Endeavour Mining CEO Sebastien de Montessus. Sebastien, it's great to have you with us.
Good morning, Rosie, and pleasure to be talking with you again.
Now, congratulations on a strong set of Q2 and interim results today. What are the key highlights?
Well, first of all, very happy with these quarter's results. I think there's probably, for me, two key takeaways. The first one is clearly we've had a strong operational performance in Q2 and for the first half of the year. To illustrate that, we had a record operating performance with production up 18% over Q1. To put this a bit into perspective, with over 400,000 ounces produced, that's an annualized run rate of over 1.6 million ounces for the year, while our guidance is 1.4, 1.5 million ounces. So we're well on track, to achieve the top end of production guidance. And our costs are also tracking well compared to our guidance. This strong operating performance has translated into a very robust set of financials. Our operating cash flow increased by 45% over Q1 to reach roughly $300 million. And our adjusted net earnings nearly doubled to reach roughly $180 million. Maybe the second highlight is, for me, our strong financial performance. We are delivering on our commitment to deliver strong shareholder returns, with in particular the announced interim dividend, which is being well above the minimum commitment that we announced about a month ago. And in parallel, we've been continuing to do buybacks. So I feel we're well on track in delivering this commitment for strong shareholder returns.
So Sebastien, diving into each of those 2 points, what's driven this stronger than expected operational performance in H1 and in particular in Q2?
Well, Rosie, the good news is that all of our mines are performing well and are on track, each of them, to meet guidance. The most significant increase has come from Houndé, where we're seeing the benefit of the high-grade discoveries made over the recent years. We've also been helped by the late start of the rainy season, which has allowed us to continue to mine and process in more favorable conditions. I would say also that the key factor to our success has been the rapid integration of the 2 Teranga assets, which are both performing extremely well. And we've also had the benefit of a full quarter, plus the synergies which are starting to come through. And finally, the team, everything comes down to the team. So you have, and I think we've built a strong team over the past couple of years, and this is starting to yield strong results. So again, thanks to the team efforts.
So just touching on your second takeaway there, it's very clear that in your June Investor Day that Endeavour has a very shareholder-friendly returns program. Now, you followed up on your commitments and declared another dividend for the half year, and you've been actively managing your share buyback program. How important is this to the corporate strategy?
Well, it is very important. This shareholder-friendly returns policy is a key part of our strategy because our shareholders have been very patiently waiting for us to be in this strong free cash flow mode. It's now time to reward them. And as you mentioned, we recently announced a minimum progressive dividend policy with a target of distributing at least $500 million to shareholders through to the fiscal year 2023. This started earlier this year when we paid our maiden dividend of $60 million for the 2020 fiscal year. And today we announced a dividend of $70 million for H1 only. So our minimum commitment for this year is $125 million. So as you can see that today's dividend demonstrates our intent to pay more than the minimum that we announced about a month ago. And in addition to that, given the attractiveness of our stock price, we've been actively buying back our stock since the program was launched in April. Today, we approximately bought $70 million of our own shares, and we intend to keep the program going.
So let's also touch upon the balance sheet. You've been focusing on deleveraging yourself. How's that going?
Well, for us, to be frank, the balance sheet is no longer an issue. If we look back to this time last year, we had nearly $470 million of net debt and net debt to EBITDA leverage ratio over 1 time. Today, our leverage ratio is close to 0, and our net debt is approximately $75 million. So in fact, if we had wanted to, we could have been net cash by now. But given our capital allocation framework, we have a balanced approach where we're continuing to strengthen the balance sheet on one side, while also continuing to invest heavily in exploration, in our growth projects, and in those shareholder returns programs like dividend and buyback. And we believe that the balance between all those components is the right recipe for long-term success.
And Sebastien, there was indeed a lot of news on exploration this quarter. Can you tell us some more about that?
Well, as you know, exploration has been a key focus area for us since the beginning, as we are operating in one of the most prospective regions in the world. In fact, exploration is both a short-term and a long-term catalyst for us. The reason we have had such a strong operational performance in Q2, for example, is thanks to the Carry Pump discovery that we made 3 years ago, which went into production late last year. So this has been a strong success. The team has been very busy this year, taking advantage of the dry season. We have now already drilled over 300,000 meters across the group. We've had a very good results from the drilling programs at our 3 cornerstone assets, whether Ity, Houndé, or Sabadola-Massawa mines, with new discoveries, in fact, at each of them, and same thing going on positively at our Fetekro project. So look out for new resource estimates later this year for each of them, because I think there will be some strong results. And given this strong success, we're clearly on track to discover largely over 2.5 million ounces of indicated resources for the group for this year. And just to give this 2.5 million on some context, it's an important number for us as it represents significantly more than our expected annual depletion. And I think that's a very strong signal that we are able to continue to build a resilient business across the different cycles.
So Sebastien, in compared to a year ago, it's clear you're obviously a much larger company. But from what I can see today, you also offer a more complete investor proposition with shareholder returns, a healthy balance sheet, a continued focus on exploration, which has been your bread and butter, and a robust organic growth pipeline. Can you tell us how this is progressing?
Well, I think it's important as a gold business to make sure you are as attractive as possible to a broad range of investors, while also making sure you can grow your portfolio organically. So regarding our growth projects, the Sabadola-Massawa Phase 1 expansion project is advancing well and on track to be completed by year-end. In parallel, we're working on the DFS for the Phase 2, which is expected by year-end as well. And of course, the DFS for our Fetekro and Kalana Greenfield projects are also making good progress. Both are expected in the upcoming quarters. Regarding Fetekro, which is a greenfield project, we are pleased to have completed now the environmental studies, and we're expecting the mining permit to be awarded very shortly. And I think it's no coincidence that all the DFS will be completed around the same time. As you know, all our projects have to compete internally for capital. So big decision dates, at the end of the second half for who's going to go first into construction.
And Sebastien, you completed your listing on the premium segment of the London Stock Exchange in June. But to be honest, I thought your share price would react much better on the back of it. How's that going?
A bit disappointed, that's true, but we're very pleased to now be listed on the premium segment of the LSE, and we are seeing very good interest from UK funds. I think it's always difficult to comment on the short-term trend, and in particular when you look at our peers in the sector, who's been also hit by the current gold price environment and volatility. But it has been pleasing to see that it has hung in there well, despite being removed from the Canada S&P TSX index. This demand was well absorbed, mainly by UK long-only funds. So I see a lot of positive ahead of us, with this set of results in Q2, and also the next catalyst for us. And one of the reasons of our listing is to be included in the FTSE and the MSCI indices. This is now approaching, with FTSE inclusion expected to occur in September. So I would say, good signs ahead of us.
Well, Sebastien, thank you very much for taking the time today. It's always a pleasure, and with your amazing story and good results, it makes for a very easy interview. Do you have any last comments for your investors and shareholders?
Thank you very much, Rosie. Before I go, I'll probably like to thank again, the team for their hard work over the past 12 months, and specifically since the beginning of the year. We already achieved a lot, this year with the successful integration of Tiranga and the listing on the LSE. But the biggest achievement is that all this heightened corporate activity has not had an impact on our operating performance. And this is due to the strong commitment of our staff. And I'd like again to thank them all because it's been again an amazing quarter this quarter.